Hi, Larry Gaines, Power Cycle Trading. Well, it's midday on Tuesday here, the 20th of February. And the markets so far, what I like to do is kind of look across all the major indexes and see what they look like based on our Fibonacci retracement levels. So, you can see here from the NASDAQ, from that swing high back in January 29th to the low here in the 9th of February. It's had a really good retracement back up, gotten back above the 618 retracement and holding steady for the last 3 days. Now you look at the S&P 500 futures and you can see it's pushed back up above the 50 retracement level and just kind of sitting below that 618. You can see the Russell 2000 just sitting below that 618 and the Dow sitting below that 618. So what I want to look for this week is to see if we can get the S&P to push back above that 618, the Russell above that 618, and the Dow above that 618 start holding. We'll see a really bigger move back for the trend back to the upside to the prior highs. So be watching that closely this week. So need price back above that 27, basically 45.50, and back above this 155, 154 level for the Russell, and back above this 25,000, call it 350. So if that happens, then look for a bigger push to the upside. And the other thing I like to do is follow the FANG stocks kind of as a proxy to the overall market as well. So let's take a look at those. So as kind of a proxy to the broad markets, especially the technology sector, you can see Amazon is pushing back towards that prior high, looking good. You can see that Google's starting to get back above its 50% retracement from its swing high to low back in January to February. So it's starting to consolidate, starting to look better for a push back up. Netflix is up at the top end of its range. The only one that's lagging is Facebook, and then you can see Nvidia still looking good at the top of the range. So those are key things to look at, that along with Apple, and that will show you either stability or weakness to the markets going forward. So let's take a look at Apple. So here's Apple, and again, you can see from its swing high on the 18th of January to that swing low that we had on the 9th, it's back above its 618. So it could easily pull back here as long as it holds this 170 down to this 168.69 above that 618. It could, pull back here this week and consolidate, but it still looks very constructive to Apple. So overall, all in all, the markets look fairly constructive midday, but the key then will be to see what do they look like going into the close, and then again, follow those Fibonacci levels that I showed you for the FANG stocks, and follow those Fibonacci levels that I showed you for the NASDAQ, the S&P, the Russell, and the Dow. Hope this helps. Talk to you on my next video update.